Good afternoon, everyone. My name is Nathan Acri, and I'm a credit counselor here at Family Life Credit Services. And I'd like to welcome all of you to our webinar for the month of May. And today we're going to talk about auto loans and leases. A little bit ahead of myself already in my PowerPoint here, it looks like. But let's just start by I'll just open with a word of prayer, and then we'll dive right into auto loans and leases. So, Lord, we just thank you for this day. I thank you for a beautiful day up here in Fargo, North Dakota. We pray that you just bless this time we have together to talk about a major area of all of our finances over the course of our lifetime and buying or leasing vehicles, Lord. And I pray that you would just speak through this time, inspire those with us today, and give them the wisdom they need when it comes to buying or leasing their vehicle. Lord, bless the time today. In your name we pray. Amen. So just jumping right in here. We got a lot to get through here in about 28 minutes, so we'll go pretty quickly. But first of all, we're going to talk about leasing a vehicle, borrowing money for a vehicle, and just buying vehicles in general. Go through a number of different things here around that process. So first of all, obviously, setting up a car deal requires a lot of knowledge, something that before I bought my first car, I know my dad spent a lot of time with me. I was a senior in high school, getting ready to go off to college. He spent a lot of time with me, and he was kind of my agent through the whole process, because I didn't really have a whole lot of knowledge around the process and the kinds of things that are possible. So having a lot of knowledge is maybe the most important thing. It gives you confidence to be able to say what you want to say, and it helps you to understand all the terms for what you're going to get yourself into. Buying a vehicle obviously is one of the largest purchases you'll make during your lifetime, outside of maybe a house or something along those lines. But vehicles, you might buy a car, you might buy a vehicle every couple of years, you might buy one every 15 years, you might buy one every 20 years, who knows. But it's more than likely something you're going to do at least a couple times during your lifetime. So first thing to know about buying or auto loans and leases, everyone wants to make money off of you. You want to buy a car, but everyone else involved is there to make money off of you. So the dealership wants to sell you a car, obviously. They don't want you to leave the parking lot without buying a car. The bank, credit union, or finance company wants to finance a loan. They want to make the interest off of you. They're going to make money. And the dealership's finance office wants to help arrange the financing, because they are the ones that they get fees, they get commissions from the sale, credit insurance, warranties, all that kind of stuff. Everyone involved, other than you, really, is looking to make a dollar. Yeah. And so everyone you talk to, one way or another, know that they're salesmen. They're wanting to make money off of you. So here's, we're going to go through 7 basic financial decisions you face before you buy a vehicle. So just to rattle off those 7 things to start with, how much can you afford or are you willing to spend to purchase a vehicle? How much can you afford or are you willing to spend to operate the vehicle? 2 separate things there. Can you afford a down payment? And if so, how much? And will you buy or lease? Are you going to buy a car or basically rent a car for a couple of years? Will you pay cash or will you need to borrow money? Will you need to finance your purchase? If you borrow money, which terms will work best for you? How long do you want the loan to be? What kind of interest rates are you looking for? If you lease a vehicle, what terms will work best for you? How many years do you want to be able to lease the vehicle for? How many miles do you need to work into the lease agreement? Do you want to be able to drive every year? Those kinds of things. So a number of different decisions. It isn't just easy as I want this kind of vehicle and let's go buy it. There's a lot that goes into this whole process. So starting with the first question, can you afford to operate the vehicle, or how much can you afford? For example, cost of gas. The number of miles per year you drive divided by the miles per gallon times the cost per gallon is something you need to take into account. So, for example, if you drive 15,000 miles per year, that's pretty normal. That's probably about the average mileage per year at a given vehicle, no matter who you are. If you divide it by 25 miles per gallon, again, maybe if you drive a pickup, it's going to be a lot less than that. If you drive a little Honda Civic, you're probably going to get better gas mileage, but on average, we'll say 25 miles per gallon. That's 600 gallons per year that you will be using. And if we just go a flat $3 per gallon, maybe we should have made that $3.50 or something, $3 or $4 depending on where you live, what time of year it is. But if we just say 3 miles per gallon is $1,200 a year that you're going to be spending in gas, which is $100 a month if you break it down per person. So it's if you got to factor that in with the rest of your bills, what you're willing to spend. If you buy a pickup or a sport utility vehicle that gets 12 miles per gallon instead of 25 miles per gallon, know that that's you're going to be spending double the amount of money on gas. You might spend $200 a month as opposed to $100 a month on gas. If you drive a long ways for work or for school, every day you might want to consider getting something that's a little more efficient on the gas, even if it's not the cool SUV or the pickup or the Suburban that you really wanted. Other things, cost of insurance. For an 18-year-old as opposed to a 45-year-old, you might pay a little more for insurance as a younger driver. The type of vehicle, if you drive a Corvette as opposed to a Ford Taurus, that's going to affect how much you pay for insurance. Your driving record, if you're male versus female, females might actually pay a little less for their car insurance. Where you live, if you live in rural North Dakota as opposed to downtown Chicago, that might affect your price of insurance. And then the amount of coverage that you need, what kind of deductible you want. All those things are going to factor into the cost of insurance. So those are things to take into account and calculate out. Maybe call around and get some quotes from insurance companies on different vehicles. And then cost of maintenance. With a newer car, and you might only have oil changes. You might have a warranty that covers just about any other maintenance, where your cost of maintenance might be relatively low. If you're buying a used car, you might want to factor in a little bit extra money every month or every year for maintenance, little things that come up. If you have a car that has 100,000 or 100,000 miles or more on it, tires. How new are the tires? When are those going to need to be replaced? All those repairs, batteries, all those kind of things are things you need to factor in when you're deciding what kind of car and how to go about purchasing or leasing. And then last couple of things around operating vehicles, taxes and registration fees. You might want to know how much your state charges for car registration. How much are the taxes going to be? Do you need, if you're taking the bus or the train into work every day and you live in New York City or wherever you take public transportation, you don't pay for parking, know that if you buy a car or lease a vehicle, you might have some parking fees associated. Add those up. Make sure you know how much that's going to cost. Toll fees. If you're driving through Chicago every day or driving through, whatever big city you live in, you need to take into account how much you're going to pay for tolls. Would it make sense to get a monthly pass as opposed to a toll-by-toll fee payment? All those things need to take into account. So then, next question, how much car can you afford? Lenders use various formulas to determine if you'll qualify for a car loan. A lot of it's going to depend on what your income is and how much other debt you have sitting out there. You know, if you make $2,000 a month and you're already paying out $700 a month on credit cards or student loans, it might be a little bit more difficult for you to get a good car loan. For example, here's another example. If you make $3,000 a month, 20% is a lot of times what a lender will use to calculate how much you can afford on debt payments. So if you make $3,000 a month and 20% of that is $600, and you have current debt obligations, so credit cards, student loans, that kind of stuff, of $300 a month, you may get qualified for a loan up to $300 a month, and then the amount of the loan would just depend on the time frame of the payoff. Another formula will take into account all of your debt divided by your income. This would include your mortgage payment then, where they'd say they don't want it to be over 40%. And the percentage obviously is going to be different with each lender. You know, if you go to a nationwide bank as opposed to your local credit union, they might be a little more lenient when it comes to the credit union. But again, if your income is $3,000 a month and your current debts are $300, 40% of your income again now is $1,200 a month. And if we subtract the $600 house payment, plus your subtract again your other $300 worth of monthly debt payments, again that would leave you about $300 left for your car payment. So, and another thing to note, just with your, you know, what the bank says, what you can afford for a car payment, make sure you go through your budget, write down all your expenses, write down how much you need for groceries and gas and all those kinds of things. Write down how much you have been spending for the last 6 months to determine what you can really afford. Too many times people get into car loans that the bank says they can afford, but when it comes down to it, with all the other expenses that a person has or a family has, that may or may not be the case when it really, when you write out your budget on paper. So usually the rule of thumb I use is, you know, go by whatever you're saving. You know, if you're saving $300 a month right now, you have $300 a month going into savings, and the bank tells you that you can afford a $500 monthly payment. Well, what makes you think you can afford a $500 monthly payment when you're only able to even save $300 a month right now? So, you know, you need to go by, you know, what you know you can afford. The bank doesn't take into account how much your cell phone payment is. They don't take into account if you're sending your kids to private school, or if you're tithing. Any of those, you know, those non-debt payments, they're not aware. They don't know how much your electric bill is every month. So make sure you know what you can afford, and not let the bank tell you what you can afford. Now, down payment, very important when you're buying a car. Two people can purchase the same exact car but pay vastly different amounts just because of the down payment. And obviously the larger the down payment, the less your loan is going to be, the less interest you're going to pay over the life of the loan. So having a sizable down payment is so important. Now this can be, again, you know, if you're saving $300 a month and you've built up a good savings account, and you can take a chunk of that and use it for a down payment, that's a major plus. But also if you have a car that you're trading in, you know, that a lot of times, that's probably the most common down payment when people buy a car, is just their trade-in. And again, like we just talked about, you, not the lender or the salesperson, should decide what you can afford. You know, don't let a car salesman push you around and try to get you into a newer vehicle, a more expensive vehicle than what you're comfortable with. Make sure you have a plan going in, know what you can afford, know how you're going to get the financing, and then go out on your vehicle search. Make sure you, when you're going through the financing, whether it's through the bank or through the finance, through the business office of the dealership, make sure you know all the details. You know, make sure you know how much you're willing to spend, how much you're going to have for down payment, and again, make sure you know how you intend to pay for it. Go through your budget. Make sure you actually have $200 a month that you can put towards a vehicle, and Maybe you need more for gas or more for car insurance. But have a good idea of what you can afford before you ever even step foot in a dealership, and let your mind start dreaming. Then when it comes to buying or leasing, the next question, if you're buying a new car, obviously you're going to have it for its full useful life until you want to sell it again. You're not buying someone else's problems. It's a brand new car. You might have a factory warranty. You're going to have the latest equipment, the styling, the looks, but you will have a high initial cost. The brand new cars are going to cost quite a bit more than even a 2-year-old vehicle because the car declines rapidly in value its first few years. If you're buying a new car, I would recommend that you have the plan to drive that new car for a long time so you get the value out of it. And you're also going to have higher insurance rates on a new car, especially depending on where you live. New cars are probably a little more likely to get broken into. Those that have the nice stereo systems or anything like that, a little bit more susceptible to needing the insurance, I guess. Leasing, again, you're probably getting a brand new car. Your monthly payments are going to be a little bit lower on a lease than it would be to buy a brand new car. Your down payment is usually relatively low, maybe nothing even. You can drive a newer, nearly new car almost all the time. If you just want to have a car payment the rest of your life, you can lease vehicles for a couple $100 a month for a couple years at a time, and kind of always drive a brand new car or a year or two old. Downsides of leasing, you never do own it. When your lease is up, it's either turning it back into the dealership and getting another lease, or buying a different vehicle, or paying a chunk of money to basically purchase that vehicle that you've leased for the first couple of years. A lot of times they have mileage restrictions on them. Actually, just about every time that I know of, a lease will have mileage restrictions on it, where the lease basically states that you can drive for 12,000 or 15,000 miles a year, and when you turn that car in, depending on how many miles on it, if you drove more than that restriction, more than that limit, you'll have to pay a fee basically per mile for how much over you went over the mileage restriction. So you make sure you know what that fee is. Make sure you keep a close eye on how far you're driving in a given month or a couple months at a time. Make sure you're on pace to not drive more than what the restriction is. And the other thing is you never really build any equity. You never get to a point where if you needed to sell a vehicle to get some cash for something else, pay off a debt, or do anything along those lines, you never really have any equity in that. And so it's, again, it's kind of like renting an apartment. You never really get anywhere. You're just always paying a dealership to use their property. So purchasing a car, you pay the price for the car, you pay the interest if you finance the car, if you're not paying with 100% cash. But once you pay it off, the car is yours to do with as you please. Once you pay off the loan, there's no more payments. You still pay for the gas and the insurance, obviously, but you're free from a payment, and you own that property. Whereas a lease, you pay for the amount of the car. You pay for the amount the car depreciates while you have it, plus the interest charges. So if you lease a car that's worth $30,000, your lease price is basically paying the dealership for those 2 or 3 years that you drive it, because when they get it back from you after those couple of years that you drive it, they'll be able to sell it for a significantly less value than what it was worth brand new. But that's, you paid for it in your monthly payments leading up to that. At the end of the lease, you can turn the car in, buy it for half the original sticker price, lease another vehicle, And if you want a newer car all the time, if you know, a lot of people like that because it's you don't have to worry so much about your car breaking down on trips or anything along those lines. Leasing might make sense to you that way. Things you need to know about leases and ask questions about: acquisition fees, capitalized costs, closed-end versus open-end leases. Each lease is going to work differently for each dealership, so make sure you know what happens at the end of the lease, what the purchase price might be, what other fees are associated with when you get the car and when you get rid of the car, how much it's going to cost to have that option to purchase it at the end. At the bottom, gap insurance. That's another important one. A lot of times if your car insurance isn't going to cover everything that goes on while you're leasing the vehicle, gap insurance can basically cover everything else, mechanical problems, or you know, if you drive more than the restricted amount of miles, sometimes that can help there. But a lot of times gap insurance too is just another thing that the salesman is going to sell you. So make sure you know what the advantages of each insurance, each part of that gap insurance would be before you just say yes. Now, if you're going to pay cash, if the interest rate on the loan is higher than the interest you earn on your savings, you maybe want to pay cash. So if your interest rate on a car loan would be 5%, and the interest rate on your savings account is 2%, you know, it might make sense to take the money you have out of savings and just pay cash for a vehicle. And the other way around, you know, if the interest rate on your car loan, it might be 2% and your savings account is 5%, you maybe finance the car, make a monthly payment on it, and just keep that money in your savings account gaining interest. The same applies for a down payment. A lot of times, you know, down payment can save you on interest, and so unless your interest rate on your savings account is extremely high, it usually makes sense to pay as much of the down payment as you can. What terms work best for you depends on your personal circumstances. 4 terms to keep in mind: the cost of the car, the down payment, the interest rate, and the length of the loan. Things to know: interest rates vary with the length of time. Usually if you pay it off quicker, your interest rate's a little bit lower. And a lot of lenders will give you lower interest rates if you set up an automatic payment. So here's a couple examples of the length of the term of the loan. You know, a 3-year loan as opposed to a 5-year loan on the same vehicle, $15,000 vehicle. Over time could save you $1,500 just by paying it off a couple of years sooner, even at the same rates, same amount of loan. So the shorter the loan, the better as far as total cost. But a lot of times, if you can get a lower monthly payment, it can get you into a nicer car. So it all depends on what you want. The longer the loan, the longer it'll take to gain equity in your vehicle. That's the chunk that you own. On a 3-year loan, you start to gain equity around 18 months into the loan. On a 5-year loan, you gain equity around year 3. Be careful about financing for longer than 5 years. A lot of times that's where people go upside down on the vehicle, and it becomes hard to sell it if you needed to, or trade it in if you needed to do that, if you get to a point where you can't afford the payment. Balloon payments, again, usually I would stay away from those. Instead of making a fixed payment, they can set it up where your payments are lower for that first year, and then at the end you have a chunk of money that you need to pay. A lot of times people, that sounds like a good idea because you can keep your payments as low as possible, but you get to that point where you need that large final payment, and it can be difficult to come up with that big chunk of money. And beware of prepayment penalties as well. Some car loans, if you pay it off faster than the 5-year, the 3-year period it was originally set up to, you can have an extra fee because the bank is losing out on some interest. So beware of those. A few more other things. Trade-in value is the present value of the car minus what you owe. The dealer may subtract a certain percentage from that amount to determine the trade-in value he will give you. A lot of the time, the dealerships don't give you a very fair price on the trade-in value, maybe what your car is actually worth. At the same time, they kind of use reverse psychology a lot of times, where they tell you they'll give you X number of dollars for your trade-in, which is kind of what you were looking for, but then they won't give you a break on the price of the vehicle you're trading for. So most of the time, they'll give you a pretty low-ball offer on the trade-in value so that they can profit off of it when they resell the vehicle. So know the value of your car before you negotiate. If you can sell it privately, a lot of times you can get a better price for your own vehicle. If you can sell it on Craigslist or through the newspaper or whatever. If you have equity in your vehicle, you could refinance the loan to pull out cash for other purchases, get a better interest rate, lower your monthly payment. But in most cases, refinancing your loan will cost you more money over the life of the loan, because most of the time you're just extending the loan period, and you can go for a long time without ever paying off your car and continuing to pay interest to the bank. Studies show that buying and leasing came out just about the same from a financial standpoint, but buying can be a better choice because of that fact that you're going to have an asset. You're going to have something where if you need some cash for something, if you need to pay off something else, you can always sell or refinance. Make sure you research prices before you go shopping. Again, know what you can afford, know what you're looking for, and then negotiate on the price of the vehicle. And shop for the car, not the monthly payment. Too many times, the car salesman will use the monthly payment, because you can make a more expensive car look not that much more expensive on a monthly basis by using the monthly payments as opposed to the total amount of money that you'll be paying out over time. Make sure you shop for financing before you go to the dealer. Go to a couple different banks. Find the car you want, check on the cost of insurance, and then negotiate the deal. Know what you're looking for, know the details before you ever even talk to a salesperson. And then compare the dealer's financing with what you find elsewhere. Don't just go off of what the dealer says, but have other options so that you're not just at the mercy of the dealership. A couple other things, make sure you choose the best terms for you, not just what the salesmen recommend. Ask a lot of questions, sign the papers, and then drive home in your new car. So just to summarize, and then we'll wrap up here. Before you shop for the vehicle, make sure you calculate the cost, determine how much you want to pay for it each month. Shop for your vehicle as an informed consumer. And negotiate the deal. Don't be afraid to ask for a lower price on a vehicle and try to get your way. The dealer is there to sell a car, and you're there to buy a car. So it is possible to get a lower price than what the sticker says and get yourself a good deal if you know what you're doing. So if you have questions on your next purchase, make sure you give us a call. 800-747-9307, or feel free to shoot me an email anytime, and there's my email address at the bottom of the screen. So that was a lot of information to get through, so please email me if you have a question on any of that. I'd like to thank you all for joining today in our May webinar on auto loans and leases. I pray you have a blessed month ahead of you, and keep an eye out for our June webinar coming up next month. Thanks, guys, and have a great day.